There's a country that prints money whenever it needs to buy things. It runs enormous deficits year after year. Its debt keeps climbing into numbers so large they stop meaning anything. And somehow, the rest of the world keeps lending to it at rock-bottom interest rates. That country is the United States. And the reason it works is the same reason it could all come apart. Most people think the dollar's dominance is about American military power or economic size. That's part of it. But the real answer is stranger and more fragile than that. The dollar isn't king because America is strong. The dollar is king because every other option is worse. And lately, some very powerful people have started doing the math on what worse actually means. Here's what changed. For decades, this was a theoretical conversation. Economists would write papers. Foreign ministers would make vague speeches. Nothing happened. Then, in 2022, the United States and Europe froze Russia's central bank reserves. $300 billion. Gone. Not destroyed, just inaccessible. Russia couldn't touch its own money. That wasn't a bug in the system. That was the system working exactly as designed. And every finance minister in Beijing, New Delhi, Saudi Arabia, and Brasilia watched that happen and asked themselves the same quiet question. Could that happen to us? China's been reducing its treasury holdings. The Saudis are signing oil deals in yuan. The BRICS nations are building payment systems that bypass SWIFT. These aren't just headlines, they're contingency plans. Because if you're a country holding $1 trillion in reserves, you just learned those reserves exist at someone else's pleasure. So let's talk about how we got here. The dollar became the global reserve currency in 1944 at Bretton Woods. The deal was simple. America had all the gold, Europe was destroyed. The dollar would be backed by gold, and every other currency would be backed by dollars. In 1971, Nixon ended gold convertibility, just stopped it. And somehow the system kept going. Why? Because oil. In the 1970s, the U.S. made a deal with Saudi Arabia. You sell oil in dollars, we protect you. Every country needs oil, so every country needs dollars. The petrodollar was born. But here's the thing people miss. The dollar's dominance isn't really about oil anymore. It's about something much more boring and much more powerful. Debt. The global financial system runs on dollar-denominated debt. Countries borrow in dollars. Companies borrow in dollars. When Argentina wants to build infrastructure or Turkey wants to finance growth, they issue bonds in dollars. Why? Because investors trust the dollar more than they trust the peso or the lira. This creates a feedback loop. The more debt exists in dollars, the more demand there is for dollars. The more demand for dollars, the more America can borrow at cheap rates. The more dollars flood the system. Right now, there's about $13 trillion in dollar debt held outside the United States. 13 trillion reasons the world needs dollars to keep flowing. Now here's where it gets uncomfortable. For this system to work, America has to run deficits. It has to send dollars out into the world. If the U.S. ran a balanced budget, if it stopped importing more than it exports, the global supply of dollars would shrink. And if that happened, countries couldn't pay their dollar debts. Companies couldn't roll over their dollar loans. The whole thing would seize up. This is called the Triffin Dilemma. To supply the world's reserve currency, you have to run persistent deficits. But if you run persistent deficits, eventually people start to doubt your currency. America's federal debt is $35 trillion. The interest payments alone are now bigger than the defense budget, larger than Medicare. The Congressional Budget Office projects debt reaching 180% of GDP by 2050. At some point, the math stops working. Except, it hasn't yet. Treasury bonds are still considered the safest asset on Earth. When there's a crisis anywhere in the world, money flows into dollars, not out of them. During the pandemic, during the banking crisis, during every shock, it's the same pattern. The dollar gets stronger.
So if the dollar is so fragile, why hasn't anything replaced it? Let's run through the options. The euro. Sounds reasonable. Big economy, stable institutions, lots of trade. But the Eurozone isn't a country. It's 19 countries that can't agree on a budget, can't issue joint debt without a political fight, and have no common fiscal policy. There's no European Treasury, no lender of last resort that can act quickly. The euro is a currency without a state. The yuan. China's economy is huge, but Beijing controls capital flows. You can't freely move money in and out of China. The government decides who gets yuan and who doesn't. For the yuan to be a true reserve currency, China would have to give up control, and it won't. Gold. Can't print it, can't manipulate it, but you also can't pay your employees in it or buy semiconductors with it. It's a store of value, not a medium of exchange. Bitcoin. Decentralized, borderless, hard to seize, also volatile, slow, and can't scale to handle trillions in daily transactions. There's no good alternative, just less bad ones. And that's the whole game. The dollar doesn't have to be perfect, it just has to be better than everything else. Now, every few years, someone writes the obituary for the dollar. In the 1980s, it was the yen. Japan was going to own the world. Then their bubble popped, and they've been stagnant for 30 years. In the 2000s, it was the euro. Then the sovereign debt crisis happened. Now it's the yuan, or BRICS currencies, or digital currencies. Here's the reality check. The dollar still makes up about 60% of global reserves, 80% of trade finance, 90% of foreign exchange transactions. China talks about de-dollarization, but 70% of its own trade is still settled in dollars. Russia tried to abandon the dollar after 2014. By 2021, it had reduced dollar holdings to 16% of reserves. Then the war started, and suddenly Russian companies couldn't access global markets because they couldn't transact in dollars. De-dollarization isn't a light switch. It's a decades-long process of building new infrastructure, new trust, new legal frameworks. And even then, it only works if everyone does it together. Which brings us to the game theory problem. Let's say you're Brazil. You want to reduce dollar dependence. But if you move too fast and nobody follows, you've just made trade harder for yourself while everyone else keeps using the system. You're worse off. So you wait, and everyone else waits, and the system grinds on. But let's imagine it happens. Not overnight, but gradually. Let's say over 10 years, the world reduces dollar usage from 60% of reserves to 40%. What breaks first? U.S. Treasury rates spike. If there's less global demand for dollars, there's less demand for Treasury bonds. America's borrowing costs go up. The federal government has to cut spending or raise taxes. Probably both. That's the domestic impact. Globally, it's messier. All that dollar-denominated debt we talked about, $13 trillion, if the dollar strengthens because of instability, those debts become harder to pay. Countries default. Currencies collapse. If the dollar weakens because of loss of confidence, then inflation hits the U.S. hard. Imports get expensive. The middle class gets crushed. There's no smooth landing here. And here's the irony. The countries pushing hardest for de-dollarization would be hurt the most by actual de-dollarization. China holds over $3 trillion in dollar assets. A collapsing dollar means China loses trillions in value. So what actually happens is more likely something in between, a slow fragmentation, not a single reserve currency, but a multipolar currency world. Dollars for some transactions, euros for others, yuan for trade with China, digital settlement layers for everything else. More friction, more currency risk, more expensive trade. The deeper question is what dollar dominance has allowed America to do. The U.S. can sanction countries and cut them off from the global economy. It can freeze assets. It can track financial flows. It can borrow cheaply and export inflation to the rest of the world. That's not a conspiracy theory. That's just how reserve currency status works. And here's the thing nobody wants to say out loud. That power has been used carefully enough that the world has mostly accepted it. Mostly. But the more it gets used, the more urgent the alternatives become. Every sanction is a reminder that the dollar is also a leash. Every frozen asset is a reason to build a backup plan. The financial version of mutually assured destruction only works if everyone believes the system is neutral. The moment it looks like a weapon, people start looking for exits. So, will the dollar collapse? Probably not. Will it weaken? Probably yes. The real question is what America is willing to do to keep it. Does it mean fiscal discipline, reducing debt? That's politically nearly impossible. Does it mean military presence to ensure global stability? That's expensive and increasingly unpopular. Does it mean weaponizing the financial system even
To enforce dollar usage that accelerates de-dollarization? There's no easy path here. And that's the part that should make you uncomfortable. The dollar's dominance isn't held up by strength. It's held up by the lack of better options and a global financial system too interconnected to fail without taking everyone down. It's not a question of if the system changes. It's a question of whether it changes slowly enough that we can adjust or fast enough that something breaks. And right now, nobody knows the answer, because the people who built this system didn't plan for an exit. They assumed it would last forever.